Hey there guys, welcome to this strategy session where we're going to talk about one of my favorite trade strategies, also known as the V reversal or the inverse V reversal. So in the example, as you can see in the chart provided, we have a typical V reversal. Now the key elements of the trade setup very simply is obviously the shape. We can see obviously we get quite a volatile initiative move towards the downside. We then get the equal and opposite, or the symmetry coming through from the buy side, creating that V-shaped pattern. Now there's a few elements to understand about this pattern. First and foremost, obviously this is the E-mini S&P 500 index from the 10th of April 2017. So a really lovely example. I'm going to show you firstly, obviously, how the trade setup evolves, where we can, potentially get stuck in and make money, as well as what the price action would look like in this trade setup. So the first thing to understand when you go through, an example or a strategy or, maybe a trade you took on, is to first and foremost, view it from the perspective of you don't know that this V is going to occur. In other words, you need to always look at it from a perspective of, at any given point in time, what information do I know? What is fact? What has the market told me that is fact-based in this market? Now, a few of the observations is obviously we can see that prior to this quite aggressive move, obviously again, just bear in mind this is a 1 minute chart we're looking at. So prior to this aggressive move, we could see the market moving relatively sideways on quite low volume. Note then obviously we saw a pickup in the volatility. So we saw the market trade 58 halves all the way down to 54. So a quick 4.5 handle move, and again accompanied by a relatively sharp pickup in the volume. Now the important thing to understand is at that point in time we can see that initiative in the market, we can see the volume picking up. That is fact-based. So at this point, as a day trader, as a short-term trader, we can see the flow step into the market, so we are looking for short-side trade opportunities. Okay, now obviously we got a little bit of two-way trade before we got that sort of second leg lower. Note as the market bounced again, notice the difference in price action between this sell side and then again this little bit of a retracement. Note how this is very one directional, a lack of overlap in terms of price, and then when it does bounce we see a lot of overlap. Also note the time taken. Okay, it takes roughly 8-9 minutes to see the sell-off, and then it takes almost a good 15 to 20 minutes of sideways consolidation. So again, very indicative that we got the sell-off. We then saw a little bit of profit take, maybe a little bit of selling backing off out of the market, the two-way trade before the secondary leg low. So again, important to point out at this point in time, we would be looking for short side opportunities in and amongst this. Why? Because we could see the initiative, we could obviously see the sellers stepping in and reloading at these prices around 54, and then we could see the intention shift once we went back offered below this sort of 52.25 before we got the extension. Obviously thereafter we saw again a very large pickup in the volume, almost double what we had seen prior, a very sharp sell-off, again some stops triggered before we then got a little bit of accumulation and ultimately distribution, also known as buy the dip trade. So what we're going to do now is we're going to go through the price ladder, have a look at first and foremost what this opportunity around the 54s looked like. We're going to talk a little bit about the market positioning at those 54s, and then obviously watch the stops go off and then see how the market responds. Look at this accumulation before we see the distribution. So let's get straight into it. At this point in time we're trading around these 52.5s. We can see, if I just fast forward this a bit, we can see the market just before this little sell-off. So we're watching this point in time now. We could see the accumulation at the 54s. What we want to see now is what happens once the market trades below these 52.5s. Remember, bear in mind, we saw almost a good 15 to 20 minutes of sideways market after we saw that initial accumulation. So we're right with the price action. We can see the market holding those 52.5s. As you can see here, we saw a good 2.5 minutes sitting around these 2.5s, a lot of two-way trade occurring before we got the little bit of aggressiveness. So what I want you to pay attention to is pay attention to the aggressiveness. Look how we move from the sideways, real lack of trade, nothing really going through the market. There we saw a buy step in, buy 400, lifting the market. But note, seller instantly reloads that offer, happy to keep getting hit by any kind of buy side price action. So again, had you been watching this price action, note obviously the sell clip into the 2s there, straight away onto the 1 3/4. So again, we can see that that seller becoming a little bit more intentional. Note, he's not hanging around now. He's sold the 2s, sold the 1 1/4, straight into the 1 1/2s. Again, note the buyer lifts the 1 3/4. What does the seller do? Instant reload on the 1 3/4. Again, instant reload there. So we can see the seller is not only reloaded the 2 1/4s, the 2s, 1 3/4, 1 1/2s. He's becoming more aggressive. So he's reloading and instantly hitting, reloading, instantly hitting, reloading, instantly hitting. Okay, what we want to watch is obviously the break of the previous swing low, which is a 53/4. That's where the stops got triggered. So let's see, bang, 53/4 trades. Note market goes bid up. 50 halves trades, 50/4 trades. Okay, again, buyer lifts quarters, seller sells, and sell. Stops triggered all the way down to 49s. Now, watch how the seller becomes more aggressive. So we can see the seller panicking into the shorts. No buy side response. Any buy side response met by an aggressive seller. Okay, so we can see a real aggressive shift in the the price response here. Again, seller steps in, not getting the the contracts he needs, not getting that liquidity he requires, and when he can't get that liquidity, he's going to become aggressive and hit the market. Okay, note, obviously our low of the day came in around the 47.5s. So let's see how the market responds once it trades that price. Let's see how that seller shifts. Obviously, you've seen a very aggressive seller, reloading the offer, and any kind of buy side, he's taken and aggressively sold again. So let's see what happens now when we do dip buy or dip below this 48.5. Let's see how that seller shifts his price response. So again, note the accumulation here. You can see it. We've traded 7,000, 4,000, 4,500, traded almost 20,000 in the lowest 3 ticks of the day. Very aggressive accumulation from this seller. Again, a buyer meets him. Any kind of buying, what does the seller do? He's absorbing, he's taking it, he's accepting it, and then going to the market. Let's see what happens now once the 8 1/2s break. So the seller holding the 8 3/4, reloading the 8 3/4, goes to the 8 1/2, again takes the 8 3/4 before going back to the 8 1/2s. Very intentional, very aggressive. Again, buyer lifts 8 3/4, seller meets him, says thank you, I will take that buy side. Hits the 8 1/2s, and guess what? Instantly to the 8 1/4, instantly to the 48 figure. Okay, so we can see still real aggressive price action, real intention coming through, from the seller in this moment at, this moment in time. So again, note the buying. We can see that buying, but the seller is a lot stronger at this point in time. Okay, 8 figures trade. Again, buyer lifting 8 1/4. Right? It's important to understand, this is a real buyer stepping in here, meeting the seller, but equally a more aggressive seller. We know he's more aggressive because we can see price moving lower and lower. Again, 1 tick extension, instantaneously we see that buyer come back into the market. Okay, and we note then all of a sudden, what happens? We trade the 7 3/4, instantly 8 1/4, 8 1/2, 8 3/4. That reloading we saw earlier has now started to back off a little bit. Now, the important thing to pay attention to in terms of this, this type of reversal or this type of price action is we saw that seller very aggressively holding from 49 1/4 all the way down to 48 1/4. So we saw real sell side action coming in there, and also we saw, as you see on the side of the price ladder, you can see almost 25,000 contracts transacted between this buyer and seller. So a real aggressive seller stepped into the market, holding this market. So our first really key pivot becomes that 49 1/4. Now, as you can see again, we're still seeing a lot of price action going in, a lot of two-way trade. Now what I want to do is I just want to fast forward back to that point of 49 1/4, and I want you to watch the response that we get at the 49 1/4. So we've come back up to it. Now note, 49 1/4 is a key divide line between an aggressive seller and a more passive seller. Okay, we know that because on the way down, obviously the seller was holding the 49 1/4 and selling, and holding the lower price and selling, and holding the lower price and selling. Now he's come back to the 49 1/4, that point where the seller was very aggressive. So note, we come up here a first time, and obviously anyone that wants to buy is a little bit reluctant, obviously because the seller was aggressively holding that price point. Okay, so again, note, obviously, again, the buyers back off and we see someone sell the 49 1/4. Let's see what happens now once we lift above that 49.25. Now, the important thing to understand, and it's a nice phrase, a rule of thumb I have, is that remember, guys, it takes time for a ship to turn. Okay, just like it takes time for a market to turn. So when you see an aggressive sell side response, it's very unusual to see a very aggressive reversal in the opposite direction. Why? Because it takes time. Right? In other words, all that sell side action that we just saw, it's going to take time for the buyers to sort of, get some, muster some confidence and muster some positioning to obviously, overwhelm the sellers, overwhelm anyone else that is still short, overwhelm any maybe fresh shorts getting into the market, to take prices higher. So always keep that in the back of your mind. So we can see we came up to that 49.25, again that price point being held. Let's now fast forward a little bit and just get ahead of it. So we've lifted above the quarters. Now remember, 49.25 was key resistance, was a key point that the seller was holding. And guess what? When we see that sort of very aggressive price point being pointed out in the market, it usually turns from being very strong resistance into extremely strong support. Okay, so at this point in time now, watch the price action and note now how we lifted above the 49.25, and notice all of a sudden how we're starting to see buyers hold higher prices in the market. Okay, we're starting to see the buyer start to hold up the very same point that the seller was very aggressively holding. Okay, now what you're going to see is for a couple of minutes, a good, that's this little point in here, for a good almost 12 minutes, we saw this two-way trade, this accumulation between, or this accumulation of the buyer around that 49.25. Now what I want to pay attention to is, I want to speed this on up until this line here, this red line of 50.75. Okay, and the reason is very important. What we saw there was an important little swing low that the market created. Now note, we saw on the first retest, we saw fresh sellers enter into the market. And we can see there fresh sellers, one, because of the key price point, two, because obviously the way the market responded there, it very quickly backed off there, and three, obviously we can expect to see anyone that's maybe caught in a bad position in long on the way down here might have tried to average here and trying to just get out of those averages. So a lot of reasons why that 50.75 became a key pivot. So let's move up to that 53.25 and let's see what happens now when we get above that 53.25. Remember, that's the important point we said, obviously, where the the sellers, all those first time sellers came in on the retest. So note the market goes, let's just move this a little bit further forward. Okay, so we're on the 53.25. Let's see the price action. Let's watch it very carefully. So key levels 53.25. Note, obviously, we can see that there's a little bit of two-way trade, 51's trade. And instantly, what do we see? A little bit of reload on the 50s. Do we see any sell side action? Very little. So there's no more sell side response now once we took out that 53.25. And that's important to understand because that's telling you that all the selling was occurring not just below the 49 and a quarter that we spoke about, but also below the 50.75. Now, once it took out that 50.75, all the sellers were gone. Not just the the aggressive seller that we saw in the first big down move, not just the secondary sellers that of averages that came from the buys trying to get out of those longs, and not just from the new short-term sellers that might have sold trying to get onto this trend. So all the sell side action was gone once we took out that 50.75, and we can see it in the price action. There's no sell side response here now. It's just simply gone 51 figure, quarter, half, 3/4, 52 figure, 52 quarter, 52 half, and we're going to see this all the way up the page now. In other words, once we took out that key price point of 50.75, that is the point at which we no longer now want to be looking for short side trades, but we turn to be more neutral. In other words, we start to pay attention to now what the price ladder is telling us. Okay, now the difficulty with this trade obviously is that a lot of people may have missed this down move. A lot of people are looking for a retracement on this down move to get involved in. Now, yes, of course, you want to maybe be looking for shorts in and around this 54. Why? Because we saw it was a key reference point in this initiative down move. The important thing to understand is that initially it did respect it. Once it stopped respecting it, you need to be switched on to not just the price ladder, but also the concept that there are a lot of people doing the same trade as you, which is looking for fresh shorts. Okay? If everyone is looking for a fresh short in this down move, and the market cannot sustain the down move, it's telling you a lot about what the nature of the market at that point in time. And that's important, guys. Remember, when something is obvious, like in this example, the short is really obvious around this 54 price. when it's really obvious, make sure you're just aware that if the obvious doesn't occur, there's always an opportunity on the other side. So let's fast forward again. Let's have a look at that 54 now, that obvious trade we were looking for, and let's see what a short side trade would have looked like. Okay, again, I would definitely advocate trying to take on, a short on the first attempt here. Okay, so we come into the 53.5s, and we come into the 53 quarters, we come into the 54s, and as you can see on the chart, the market backs off. Okay, now note, if you thought there would be fresh aggressive selling coming in around those 54s, we shouldn't have seen this real lackluster type price response in a 3-tick range for 7 or 8 minutes. Okay, we should have seen something more aggressive, maybe even coming back to retest this key price that we spoke about, 50.25. Okay, the mere fact that we couldn't, offer down aggressively as you would have expected is the clue. It's the clue that the sellers aren't as strong as you think, and that actually we're seeing a lot of buy-side response. Now note, we spoke about this being a key reference point, these 54s. We could see that there were fresh shorts entering. Once those 54s went, let's fast forward and see what happened. Okay, and this is the last key piece of a key reversal, a V reversal trade, is that this is where the meat is, guys. This is where you really want to get stuck in and be aggressive. Okay, a lot of this obviously is not easy to get on. So this last part, the getting above that final reference point where the shorts are desperately still trying to get on this initiative down move, that is where you want to get aggressive. So note, 54s lift and into 54.25. Okay, let's see if we can see any sell side action. You're not going to see, you're only going to see buyers getting into the market. Now note, those buyers aren't fresh buyers. They are anyone that has been shorting this on the way up that is now getting out of those positions. They're scrambling out of those positions, and that's what creates this aggressive move right at the end. It's the stopping out of anyone that was caught shorting this on the way up that creates that final meaty move to the upside, and that's the meaty move that we are interested in as day traders. Okay, so back to the price action, we can see a real lack of sell side response here, only a bit of buy side trade. Okay, 54.25 trades, straight around to the 54 halves, no sell side response. Okay, if there's no sell side response and people are trying to get out of their shorts, they have to buy out of them. And we see 54s lifts, a little bit of sell side response. Okay, again, straight into the 54 halves, straight to the 3/4, straight to the figure. Right, we're starting to see anyone short now become a little bit more urgent in trying to get out of those trades. Okay, again, well, the reason, that, and I'm going to show you a perfect example now, is, how you come up with these V reversals and these trade strategies is by learning from your losses. So you're going to see this trader take a nice loss here at the 55.5s, and you're going to see him very quickly scale out of this or get out of this because of the type of price action. Okay, in other words, he's looking to get short here, but he notices straight away there's a real lack of sideways or sell side trade, implying that these buyers are overwhelming. Okay, so we can see again 55.25 lifts and straight into the halves. Now let's see what happens once we get filled in and around these 55.5s. Okay, so we can see 55.5s fill, and let's go back a sec. So 55.5s fill, a real lack of sell side trade. Okay, we can see a little bit of selling coming in there. All right, a little bit of sell side action. We can see someone sold 739 there into the market. And guess what? The price cannot even go down. The price cannot even tick down. Buyers are so intentionally wanting to buy that the price cannot even go one price increment down, even after we've moved from 48 figure all the way up to 55. So 7 full handles, we still cannot see any meaningful selling. Right? And that's the clue, guys. In essence, some of the price action that we see that doesn't make sense to us is often the clue that something else or something more meaningful is actually occurring. Right? We can see, obviously, note, trader trying to scramble. Note, the trader's now realized a lot of sell side action. He's looking to get out already. Not interested in this trade anymore. Can feel the price action. And again, note, all of a sudden, quarters lift, sixes lift. And guess what this trader's going to do now? He's panicking as well, just like every other market participant. And 6.25 trades and 6.5 trade. Okay, you get the feeling of this, guys. If a day trader is struggling to get out of a short-term trade because the price action is so strong, it's very indicative of the type of price action that's in this market. Okay, ultimately, obviously, the market comes all the way back, finishes the V reversal in and around that 58.5, and then offers a short-term trade opportunity. So to sum up, guys, this is a V reversal. Our key trades, first and foremost, remember, we do not know this is a V reversal. So first trade we're looking for is the initiative. Okay, so we see the initiative, we get the pullback. Right, we want to enter fresh shorts here. So long as the market doesn't aggressively reverse, we see a slow little reversal here. We want to be entering on the first pullback, looking for that secondary extension. Once we get that secondary extension on the high volume, we want to take profits. Now note, at this point we do not have a V reversal. We merely have reference points. We note our first key reference point, which was our previous swing low where the stops went off. Alright, we want to watch the price action there. If that first reference point goes, we sit up and we pay attention. Why? Because then we're likely to retest our second key reference point. Alright, the price action at that second reference point is key. Alright, so important. If we see sellers struggling to get any kind of prices lower, that will give us a more aggressive up move. Note, had we come all the way back up there or down to this sort of key 50 3/4 and then gone and taken the 54s, the price response to the upside would have would have likely been far less aggressive. Why? Because anyone short would have been able to get out of those shorts at lower prices. Okay, the fact the price couldn't go down means that anyone short had to pay up. And it's that paying up that creates that aggressive final leg. Alright guys, I hope you've enjoyed this, this little preview of a V reversal, noting where the trade opportunities are utilizing the price ladder chart. If you have any questions, obviously, feel free to tweet, the Axia Futures handle. Otherwise, I hope you enjoyed this and we'll catch up again soon.